IVM.
All right, welcome to Shunya One, episode 90.
10 short of a century.
Yes, we're almost getting there, Amit. This. I think we made something. This is
Yes, we
becoming
are.
something.
I
now.
think I think we might have crossed our second anniversary just about now, because if I remember correctly, the thing that we did at WeWork last year
Yes.
was around this time. It was late
Exactly.
April.
Exactly.
So
we've
yeah.
done a bit of replays on a few weeks.
Yes, we have.
But we are.
But 2 years
to,
into it, Sheila Aditya, what do you think about your podcasting superstardom?
Well, I know with great power comes
Yeah.
great responsibility.
Okay. So, but we're going to speak to some responsible people, right? I mean, like,
Absolutely. Absolutely. So it was a fun episode last week.
Yes, it was.
What is our
So the
whole
Slack
thing?
question that we asked was, if you were starting up as an entrepreneur, would you look for a potentially profitable but limited business, or would you be trying to build a unicorn? And basically the answers we got were 93% would like to build a potentially profitable but limited business, and only 7% would like to build a unicorn.
Really?
Does that surprise you?
Well, I think it's sign of times, right?
Yeah.
I think we saw one unicorn building phase, and then we saw that, well, very few of them really became unicorns or lasted.
Last year's unicorns.
And I think the second wave that we're seeing now all talk about businesses that, stand on their own legs. They still get the unicorn status and funding, but I think they have something to them, or
Sure.
at least so it seems.
I buy that too. I mean, I think that anybody, I think it only makes sense to look at businesses if there's profit motive involved, right? I mean, if businesses that are going to lose money forever are not really, well, not everybody's
Yeah.
Uber, right?
We'll see how that IPO also does.
We shall see how that does. I think a lot of that was overdone. People just saying whatever they wanted to say, because it's a filing, right? In a filing, you have to use certain kinds of languages.
We'll see whether they are beaten about it, or
well, we shall
we
see.
shall find out when that
Anyway,
actually goes live.
we have a good episode in front of us.
Yes, it's a fun episode. Today we're talking to our first Calcutta entrepreneur.
Yes, I know. Calcutta has a thriving entrepreneurship scene, or tech scene, or
we'll find out.
We shall
Let's
find out.
go talk to our guest for the day. All right, welcome to our show. I'm here with Gaurav Jalan, the founder of M-Pocket. Welcome to the show, Gaurav.
Thank you.
How's it going? You've here from Calcutta. You're actually
Yes.
one of the first founders I think we've had on Shunya One who is based out of Calcutta and building a company out of Calcutta. So before we actually get into how you came to found M-Pocket, I'm really interested to know, how are you doing this? And how is the tech scene in Calcutta? We'd love to know.
So we're trying to build the tech scene in Calcutta. I mean, it's not as vibrant as a Bangalore or a Bombay or a Gurgaon, but we're trying to act as the anchors and maybe start the process somewhere, because it has to start with somebody.
Right?
So the decision to build in Calcutta was not as calculated as you might imagine. I mean, I just happened to be from Calcutta, so I was living there. So when I started a business, it happened to start in Calcutta. Right. So, but yes, I mean, it does come with its set of challenges, because if you don't have an ecosystem, it's difficult to find the right people to join you in the journey. So we've been, it's been a little challenging, but we found a very good set of people now who are at M-Pocket and helping, build this enterprise. But yeah, I mean, certain roles, like especially technology specific roles. So the dirty secret is that our tech team is based out of Bangalore.
There's the truth.
That's interesting. So, but what other kinds of companies are there in Calcutta? I mean, again, we don't have Calcutta people often, right? So let's try and kind of find out if there are other interesting startups you could mention from there.
So one startup that I can name, Wow Momo.
Of course.
It's all over the place. They're from Calcutta. So we do have our share of...
Very interesting, enterprising businessmen.
Right.
Let's not discredit the Bengalis.
Oh, yeah, of course. I'm sorry.
We are cool.
I did not
when
realize
we want
that
to be.
I was...
but it's just that not too many of them are in tech.
Yeah.
So, yes,
That's
there's
true.
enterprising businesses for sure. But coming back to your story, of course, could you tell us how M-Pocket came to be, and of course a little bit about the genesis of this product and now its journey so far?
So M-Pocket started from a confluence of two things. One is my personal background is in finance, So I have, I've got an MBA. I spent a lot of time as a financial investment analyst. Also, the other part of it is that I did my college education outside India in the US. So one thing that I had there, the advantage of, was as a student, I had a credit card, right? So that sounds very simple, but all my friends back here, and even to this day, if you're a college student in India, it's pretty much impossible to get a credit card. And I'm not talking about add-on cards with your parents, right? That's different. I mean, you cannot get a personal card on your own credibility.
Right.
And as a student in the US, I found that credit card extremely useful to manage my finances, to manage those occasional shortfalls. And there is absolutely no reason why a student in India is any less trustworthy or any less good with his finances. Right. So that's where the genesis of the idea came from. I was from a finance background. I was looking for business opportunities, and I saw this as a kind of blank space that needed to be filled. Right. So that's how we started. Very small, very simple. The idea was, let's come out with a simple product. So essentially, M-Pocket is it's a credit card on an app, right? So any student, they just need to download the app. There's a one-time registration process because we need to meet regulations. So the student needs to do their KYC, but that's a one-time thing. Once that's done, we assign the student a credit limit. It's similar to what you would have on a credit card, right? You can borrow up to X amount.
Right.
And essentially, these are small loans. So our average ticket size is 1,000 rupees, right? So it's meant to fulfill short-term kind of cash needs of students. So it's just to get you over that hump until month end. You just need this little extra money to spend on something. It could be education related, and a lot of our users do. For example, they've told us they use it for exam fees, they use it to buy books or the occasional thing, but it's also non-education related. It's, it could be travel, you need to take a cab once in a while, it's expensive, you don't have the money, you want to just entertain yourself, you want to eat out, you want to spend a little extra, you want to go for a movie, you want to take your girlfriend out on a date a little short. So, personally as a company, we don't look down on that and say, hey, if it's only for your education, borrow from us, or otherwise, it's not a good thing.
But there are different things also, right? I mean, like borrowing for education as opposed to borrowing to manage your day-to-day cash they're just fundamentally different uses, right?
They are. Yeah. And so our approach is that we leave that up to the individual.
Right.
We're agnostic. For some people, the joy they get from, that occasional extra spend on something that might seem discretionary or wasteful to you and I is, as much as another person might need to buy that book or pay that extra exam fee, etc., or take that cab to go somewhere,
right,
buy a bus ticket, whatever it is. Right. So those are the little needs we're trying to fulfill. And so far the response has been phenomenal. I mean, since we launched this about a little over 2 years ago, and today we have about 3.5 lakh users all across the country who are using M-Pocket, and on a daily basis we're onboarding a few thousand users.
Wow.
Right. So it shows that there's demand for something like this, right? And there was a need that just wasn't being fulfilled before, and that's what we're trying to do.
And you're squarely focused on the audience being college students. That's the constraint which you've put. While you've not restricted how you can use the funds, you are going with this particular user set which you want to go after. How are you focusing on that? Like, what could you tell us a little bit about the internal thesis which you have around why that's a good audience to go after, why this sort of ticket size? Especially in fintech and loans and lending, there's a fear of people not repaying. So give us a little insight on what you have over the last 2 years seen.
Absolutely. So, as I explained, the genesis of the idea was let's try and identify a gap or a need that is there and try and fill it, right? So this was one obvious gap that was there, because there are a lot of other companies that are, trying to lend to people who are salaried, people who are, small entrepreneurs. There's the microfinance is a big industry. They're already lending to kind of people who are, not below the poverty line, but in rural areas, trying to build businesses, etc. So those were, areas where there were other people who were trying to do something already. So we felt that this was novel. This was something that no one was doing. And, that for that novelty and for that kind of potential, we should give it a shot.
Right.
So that's how we started. And frankly, the demand has been so much, and the feedback we've got from the users has been so good that we've just continued to do this. That is not to say that we'll forever just keep doing only this, but as of now we feel like there's more than enough room for us to continue to grow in this segment. But what we've also started to do is our students who are now graduating and getting jobs, we're allowing them to continue to borrow. So that is a natural progression for us. It's also, these are our existing users, we understand them, so there's no reason for us to stop providing them the benefit that they've been getting from M-Pocket while they were students. So this was a natural progression, something we introduced about 6 months ago.
Will you increase the ticket size once they're out of college?
Yes, so based on their salary, the kind of job they have, we do increase the ticket size and allow them to borrow more.
So that changes in some ways the risk factor as well, right? Because now you're on a larger number. I get that you can mitigate the risk more, but you are, each individual loan is higher risk.
No, absolutely. So that's something that's dynamic. It is, risk is never a constant, and you have to continuously tweak your assumptions, what you're doing, who you're lending to, what amounts you're lending. Those are fluid things. Right. So we don't think of them as static, and it's just a business decision. You have to kind of keep trying new things.
Right.
And this is an attempt on our part to try something new.
Tell us a little bit about this, the understanding risk part, because again, when I think about college students, they are uniquely, yes, underserved like you identified, and hence you have the solution. But they also, even though they're borrowing money, they're not repaying from something they're earning. They're repaying from either pocket money or parents' money, or I actually don't know what. I didn't have money. I only had my parents' money in college. So how would I repay people I borrowed from? So what's the understanding there? And have you looked at, what does your data tell you now that you've started doing this for so long?
So I think you're absolutely correct in that, college students are obviously not earning full time. They're studying. So therefore, by definition,
and in India, there's no work culture. I don't think there is about like joining a McDonald's and part-time jobs during college.
Although you'd be surprised. That is data that we do collect, and we see an increasing trend in that direction.
Oh, please.
That
share,
people are, an increasing percentage of our students are getting part-time jobs, and they're sharing that information with us, because that is something we ask them to share.
What kind of places are they working?
So it can be, for example, the Swiggy's. Or Swiggy of the world, Swiggy, Zomato. These kind of delivery services have become a big employer of students, right? Because you have it's even like you don't even need to have your own vehicle. Your friend has a motorbike.
Right.
You have a few hours between classes.
Wow.
And you just, sign up, because these are on demand, right? The good thing is the hours are very flexible.
Right.
So I think we've seen some of that. I don't want to suggest that it's a trend and that a very large percentage of people are doing this, but we've seen enough of it to suggest that people, students now are taking this seriously. They do want to kind of earn their living, and it's also just, it's aspiration. People have more needs, therefore they want to spend more money, and this is obviously, earning, you need to earn more money to spend it, because beyond the point, I think everyone's parents has this fixed pocket money that they'll give you, right? It's not unlimited.
Money,
Correct. And if you look at the India market also, and especially given that you're in so many in so many pin codes, like you said, across India, you're serving people of every economic strata.
Absolutely.
Right? And given that you're doing such small micro loans to people students who genuinely may not have even a pocket money, or or have the I would say the discretionary spend pocket money. They'll have pocket money for literally food, this, and that's already covered. So they don't have the discretionary spend budget. So how, and with you they get that. So how do they repay it?
So look, one of the ways we mitigate this is by actually just keeping this loan size small.
Right.
So that generally the idea is, if you don't lend a lot of money, the problems in repaying it is less. Right. But you're absolutely right that, what about those people for whom even, let's say, 1,000 or 2,000 is a lot of money?
Right.
So we do have certain ways of identifying or proxying that. I mean, obviously it's not perfect, but by and large, I'll give you one example. For example, what type of phone are you using? Right. So that is information that, because we're lending through a mobile app, I mean, there's a lot of information on your device that we get.
Correct.
Right. So we can use, like, the type of phone you're using tells us something about your paying ability, right? Or if you're able to buy an expensive phone or a phone of a certain kind,
Right.
I mean, it probably tells us that, okay, you'll be able to repay 1,000 rupees comfortably.
Wow.
Right. So things like that. I mean, today, for example, SMS data is a treasure trove of information, right? I mean, any financial transaction that you do,
Right.
it leaves an SMS trail.
Right.
So our algorithms can analyze that data and, again, proxy what your spending ability might be.
Right.
Right. So kind of we use various things to build intelligence around this, because obviously you don't want to be indiscriminate.
Correct.
Right. Because you might end up kind of hurting people indirectly instead of helping them. So
Correct.
we try and be careful about that. But yeah, it's not 100%. I'll admit that, because when you're working at scale, I mean, you can only estimate certain things. I mean,
Right.
it's very difficult to be 100% sure about everything.
Nobody's 100% right. Even the biggest banks are not 100%.
Yeah.
So, I mean, that's not this. I mean, like, is it... So, like, I mean, like, you were mentioning when we were talking offline, right? Some of the ways that you are controlling for fraud.
Yeah.
I think that might be an interesting bit to start to talk about a little bit right now, right? You were mentioning how some of the tricks that people use to try and trick you guys.
Yeah, so some of the common things are, one student trying to create multiple accounts, for example, because we restrict how much you can borrow. So, they think by creating multiple accounts, they can, borrow more money. So again, we have, based on the data that we're collecting, it's very data driven.
Right.
Right. So based on the data that we're collecting, we've set up intelligence around this to throw out probabilities that a certain account is a fraud, or a certain transaction is fraudulent. So for example, I mean, if students in a group or a cluster are trying to do something, the sequence in which events are happening, which phones they're using, in what kind of sequence the loan requests are coming in.
Wow.
So things like that. I mean, there's a lot of data that we can put together, and we build
Sure.
models around this that help us, catch a lot of this. I mean, I'm sure
Sure.
there are people who get away, and they'll probably, if some of them listen to this, they'll be laughing, saying, haha, I actually got you guys.
No, I think this is what you're trying to do is obviously something which everyone else in this space, like the fintech overall space, is also doing, right? The mining data for patterns is
Absolutely.
the fundamental of most fraud techniques, and the fact that you're right. Today, via our phones and via the data on our phones, we actually give up a lot more data than even the best banks in the world used to have, right?
Right.
Before
Yeah,
this,
yeah.
even the banks didn't have that data. Hence, they were super restrictive
Correct.
about
And
lending.
sometimes
in
you get surprised, right, by the kinds of stuff that things know about you. I think it was Paytm or one of these other apps, right? And they basically they had asked for my SMS. Can I read your SMS? And they asked for it because I had to put money into it.
Right.
And then all of a sudden it's like, would you like to pay your mobile bill from here? And I was like, okay, all right, that's interesting.
But that's what you're giving up.
That's what I am giving up, right?
Right.
Yeah.
I mean, this is clearly a trade-off. I mean, there's a lot of talk about privacy. Europe has come out with this bill called GDPR.
Right.
Etc. India is working
Coming
on its
up,
own
yeah,
version.
yeah.
So I think it's privacy is extremely important, and I would definitely advocate for privacy. But I think it's important that a balance is drawn, and ultimately that somewhere that choice is left up to the individual, right? Because if you try and make it too restrictive, what will happen is a lot of these services that, for example, things that we are doing based on data, if you restrict the data collection too much, there are certain decisions that we won't be able to make, and therefore what we will choose to do is simply not offer that service
Right.
to a certain segment who's getting it. So I think the government and policymakers just need to draw a balance somewhere. I'm not suggesting
The
that
trade-off
privacy is
between
not
convenience and
important.
privacy.
Yeah, so and it's best left to the individual with some basic ground rules.
Right.
But it's ultimately it should
They
be
shouldn't
left.
be deceptive, but if a person wants to give up the privacy for the convenience that's available, they should have the
Yes.
right to do that. Just as a person should have the right to maintain privacy if they'd like to.
Absolutely.
I
No,
think,
that's exactly.
yeah.
You're saying you should know what you're giving up and against what benefit.
Correct.
As long as that, if the people want the benefit, you have to.
You have to give
you
up the privacy.
Yeah.
Exactly.
So that's standard, I guess, again for this space now. I mean, I know the conversation around privacy actually is more hot now than before.
Right.
And in the early days when, especially with SMS data, we've had a conversation about that before, that people used to say yes to everything, and no one cared about privacy. When the internet exploded in India,
right,
people have given up God knows what access of their phones.
All kinds of stuff, right?
So there is a treasure trove of data with everyone who started early on in this space, I guess, right? And I mean, now the constraints are coming in. But yours is obviously a genuine use case of this, right? You need this data to build a profile. You need this to counter fraud. How do you see that the overall the space which you're in right now? It's lending to a certain subset. Is your product is it getting easier to do business, or is it getting more restricted? Obviously, demand, like you said, is there. There's you've clearly established that there is people need this, right? And the patterns are emerging, which you just said about the fact that people are repaying also.
Yes.
But how easy is it going to be going forward to really expand on this full-fledged? Or do you see competition coming in? Do you see the banks which now have the same access to data?
Right.
Can they do this now suddenly and they'll sort of just overtake you think?
So I think competition is it's a constant, and I mean, if you're doing any kind of endeavor, you have to assume that competition is going to come at some point, even if it's not there at present. So that is not something that we worry about at all. I mean, it's you kind of just keep your head down and do what you're doing. As far as banks specifically are concerned, I think we're still a long way off before banks enter this kind of lending, and there are various reasons for that. I mean, banks, even though, as you said, for example, I mean, SMS, etc., they're a good source of information. And it's not like banks don't have the bandwidth. In fact, they have more resources at their disposal to build, whatever models they want. But I think it's just the way they're structured, the mindset, the legacies that they come with. It's very difficult for them to offer a product of the kind that we're offering, right? And also sometimes it's just about the size of the opportunity. So, what for us as a small company who's just started out is very interesting to do, for a bank of any reasonable size or even a large size, non-bank institution, may not be interesting.
Right.
So they'll just kind of dismiss the opportunity because they'll say the market size is not large enough, for example, right? So that is something that's there. But you asked about whether things will get easier. So I don't think, there's always challenges. Again, challenges are a constant. It's just that the form changes. Right. So there is, sometimes it's about regulation. So again, when you're in this business, regulations are a big issue, right? It's a very regulated industry. You have the RBI, you have other regulators who get involved as well. We just talked about privacy laws. So that's another regulation that's imposed.
So, that actually, just jumping into that, right? I mean, we had an episode recently where we were talking a lot about regulations and stuff like that, right? What are some of the regulations that you are dealing with that you find most onerous?
So one example that I think you will find, commonly stated is the KYC process, for example. So it's not necessarily that the process is onerous, but there's, for example, now what's happened with Aadhaar and the Aadhaar judgment by the Supreme Court last year. There's a lot of ambiguity about, what is actually allowed, what is not allowed. There's still a lot of gray area. People are still trying to interpret it. You had the full Aadhaar stack that was built out on certain assumptions, and now you can't use it effectively, right? So it's not so much regulation, but it's a sudden change in regulation,
right?
And, not giving people enough time to adapt.
Right.
I think that is the biggest challenge. It is not about, if you lay out the rules clearly, I think most people will,
work around
it and figure out a way to follow them.
Right.
But if you change them overnight, I think, any practical person has a, tough time dealing with it, right? So because you've set up all your processes and everything around, doing things a certain way, and then the rules are changed overnight. I mean, that becomes a challenge for anybody.
All right. On that note, I think we're going to take a quick break, come back and talk some more.
Hello, everybody. Welcome to another great week on the IVM Podcast Network. If you are not following us on social media, please make sure that you do. We're IVM Podcast on Twitter, Facebook, and Instagram. So we have something really exciting in store for Star Wars fans. After a successful first edition of the Geek Fruit Cantina, we're back with another. Come celebrate Star Wars Day with us. That's May the 4th with Geek Fruit at the Cuckoo Cafe in Bandra. That's in Mumbai. We have a super fun evening planned with a live podcast featuring special guests, Star Wars merchandise up for grabs, Linkers games, along with Star Wars themed food and cocktails. You don't want to miss this. This week on The Seen and the Unseen, Amit Verma's guest is economist and researcher Ajay Shah. The two of them talk about zombie firms and banks artificially kept alive by taxpayers. They also take a look at the recent collapse of Jet Airways. On the second episode of the Ronnie Screwvala podcast, Dreaming with Your Eyes Open, Ronnie Screwvala talks to me about the importance of failure, how age shouldn't be a deterrent for entrepreneurship, and setting the right expectations for your venture. On IVM Likes, Janam, Abhineet and Madhuri discuss the gut-wrenching Netflix original series Delhi Crime. On Shunya One, Sheila Ditya and I are joined by Gaurav Jalan, founder and CEO of M-Pocket. We talk about the current tech scenario in Kolkata and also get into the technicalities of M-Pocket. On Advertising is Dead, Varun talks to Advait Gupta, co-founder and CEO of Supari Studios, about branded and purpose-driven content. On the Filter Coffee podcast, Karthik is joined by Siddharth Deshmukh, who shares his experience at MICA both as a student and as a media professor. He talks about liberal education. In Echoes of India, Anirudh explains how brilliant political and religious innovations in 5th century India led to a spurt of temple building. On Croc Tales last week, Anand Sivakumara reveals the last part of his tale's psycho girlfriend and begins another multi-part story on Anita's toothache. And with that, let's move on with your shows.
All right, welcome back. So that brings me to another aspect of, again, this business, right? Jokingly, by the way, now, 2 years ago when you started, it was obviously, one of the various things you could do in fintech, but now lending specifically has somehow become what we see as a feature.
Right.
Right? So if I have any product today, I could lend some money to you, right? In some way or form. So yes, the joke is lending as a feature, but you're obviously doing, again, a very focused part of it. Given that traditionally, for banks who have been the erstwhile lenders of, before fintech arrived, the way they made money was actually on interest, right? You give a loan, people pay back with interest. How are you making money, especially at these small ticket sizes? And what's the future of how you as a business will thrive in this space?
So, we do also charge interest and fees just like banks do. So that is our primary way of making money. Apart from that, I think there is, and I speak generally here because we are not doing these things at present, but longer term, the idea is that, you can identify the needs of a customer and offer them various other products in partnerships with other companies, right? So for example, if I have a student, I'm doing small ticket loans to a student, but if I identify that there's a certain student who might want to buy a two-wheeler, right? So what stops me from partnering with banks who offer that product, and offering that service to the student? So it's basically about identifying the needs of a customer, kind of owning that customer, understanding what they want, and then partnering with other people to kind of offer them those products. And that is another way of generating revenue. Now, every business needs to decide, how much or what they want to do, and whether, again, you want to keep the product simple and just offer, the core, or you want to build a lot of things around it and have a lot of partnerships and offer all these other things. So that is a decision, and I think different people do it differently, but those are the various models of kind of generating revenue on lending. I do want to come to your point about, lending as a feature. I know this started on Twitter. It's become very popular.
Yes.
So I have my own views on it. I think I don't quite agree about, lending as a feature. I think these things tend to trend, so you have a certain trend that starts, everyone tries it out, and then, the proof actually comes a little later once, the kind of the tide goes back.
Right.
So I was joking earlier saying that, you've got someone who's, delivering milk, and they figure like, I know how much milk this guy buys, so I understand the risk and let me start lending money against that. I think you can make that leap and you can do it. But there are a lot of other facets to lending. I think lending in itself is it's an entire process in itself. It's not so, which is why I think the feature versus business argument, I would not say it's merely a feature.
So when people are talking about it as a feature, you think they're looking at it too unidirectionally. They're not giving it a full kind of...
Yeah, I think they're not giving it the kind of depth of kind of analysis that it needs, right? Because it's, again, in lending, it's very easy to lend out the money. It's about kind of getting it back and making money in the process.
Right.
So I think that is where a lot of people will realize the challenge lies.
Right.
Eventually.
So I know a lot of these other startups who are using it as a feature are obviously doing it on the back of a bunch of VC money and capital raised. How are you managing? How is your company structured when it comes to lending? Are you lending off a book? Are you lending off? Explain a bit of how that model works, because you said you're making money on the small interest part also.
Yeah.
So are you working with banks? Could you share a little bit about the structure of your business?
So in India, to lend money, you either have to be a bank or you have to be licensed as an NBFC by the
Correct.
RBI.
Correct.
So we are currently, M-Pocket is currently neither. So the way our model works is we are a platform. We partner with NBFCs who are actually lending the money.
Aha.
Right.
Okay.
So that is how we operate.
Okay. So you own the identity of the customer in the relationship, and then work with the lending party.
Exactly. Yeah.
But do they impose their own constraints? They're the same people who would not lend to this guy, right? What changes when you bring your relationship in the mix?
So what we bring is the intelligence that allows these people to be comfortable with the risk.
I see.
Right. So based on our models and what we're able to demonstrate, these lenders that we partner with, they're comfortable taking on that risk then. And, to be fair, we are not currently partnering with big banks, for example. So I think it's still a while before we can convince, let's say, a big bank to lend to this segment.
Correct.
But at least, I mean, the more kind of adventurous, smaller NBFCs, etc. I mean, there are companies who are willing to experiment a little bit and take on that little extra risk and see whether it's worth it.
And it's panning out, like you said. You have 2 years worth of data now.
Absolutely.
You're seeing that you are able to recover money with interest and able to pay, obviously make some money and pay back your NBFC partners.
Yeah, absolutely. I think our partners, if you speak to them, will say that they're very happy with the journey till date.
Right.
And excited about what's to come ahead.
Right.
And, we've been able to build a good institution. I mean, today at M-Pocket, we employ, nearly 200 people.
Wow.
So it's...
Between Calcutta and Bangalore.
Yeah.
What's your split in terms of tech versus business? Just in terms of manpower?
So tech would be about 10%.
Okay.
The rest is business.
So it's more
Because
operational, is it?
It is because it's a consumer-facing business. I mean, it tends to be operational heavy. There's no way around that.
Right.
So you run call centers, or mostly is it like through chat, or how do you interface with your customers?
So it's a mix, yeah. So it's a lot of calling. It's also email, chat, WhatsApp,
Awesome.
SMS, is all the kind of remote channels.
Do you use any kind of automatic chat system for this, or is it all like fully manual?
So as of now, it's mostly manual.
Okay.
But chatbots, they are very popular. We're trying to figure out how to make it work best. What we don't want to do is, offer something just for the sake of the technology and not have it work properly.
Right.
So you don't want an automated chatbot that doesn't give a good response. I mean, so we'd rather just take a little bit of time and give a good response to the user.
And I think the core intelligence of your platform is fine-tuning this whole what to give, who to give to, right? That's the intelligence you're building.
Exactly.
The automation can always work around it once you have that optimized. So,
absolutely, you're spot on that.
Right.
Yeah.
So what is the next step? I mean, now obviously you have the intelligence you have so far. You are at 3.5 lakh users. You're lending a certain amount you've already lent out. So you have a book which is out there and that size is growing, right?
Right.
There's obviously a large opportunity ahead. The market is huge. What's the scope? Like, do you have any targets which you have you've mapped out, which you want to go to?
So I think, the way we think about it is there's give or take about 5 crore college students in India. Right. So in terms of size, we're still tiny. So the first goal is to at least get to some meaningful size where we're reaching a good percentage, maybe 10-20% at least of the college student population in the country. So that that's a huge headroom that's available to us and that we need to kind of do justice to. Beyond that, as I mentioned, I mean, as these students graduate and get into jobs, I mean, that segment we think is very interesting. And that is, again, something that is not really being tapped into by existing players very effectively. So people who are graduating from good colleges, getting into good companies, I mean, they don't have an issue, right? I mean, they get their, they have bank accounts, they get personal loans, they get credit cards, etc. But there's a huge chunk of the population that ends up working in, relatively lower paying jobs at small companies or maybe the local restaurant or, places there where they would be earning maybe 10,000-20,000 rupees a month, that kind of salary. So these people still face a big challenge in getting credit. Right. So the idea is that what we're doing with students, we want to also be able to do with this segment of the population, right?
Actually, and since you start acquiring them as customers when they're students, actually that's a really good way to kind of move forward with them as well, right?
Exactly.
You already have data around each of these people. You can kind of move up to all kinds of loans, right?
Yes.
At that point, yes.
Very cool. Very nice. Do you want to share a little bit about obviously how you're building out of Calcutta and why folks should want to maybe join your team? Are you hiring? Are you expanding? Tell us maybe a shout out to our listeners on where they can reach you, talk to you on Twitter or or anywhere else.
So, people can reach out to us via email. That's the best way to reach out to us. We are growing very rapidly. I mean, as I said, the demand is huge. It's growing rapidly, and our organization is growing along with that. So we are always looking for young blood to join our company. Actually, most of the people with us, it's mostly their first job, right? So we're actually hiring a lot of fresh graduates.
Right.
So sticking to your
to your
demographic. Lovely,
to our demographic, exactly. So if you're out of college, you've just graduated, you're looking for a job, you are in the Calcutta region because you're there, do look us up. I don't know how many people out there want to make the move to Calcutta for this, but if you do, we'll welcome you with open arms. Yeah, so do give us a shout out. We're looking for young blood. We think we're building something very exciting. We think we're serving a genuine need, and you want to have fun while you're doing it.
What about you? Are you on Twitter yourself?
I am on Twitter, yes.
What's that?
Gaurav_Jalan.
Just a reminder, guys, we are, if you want to join our Slack channel, please go to the website, ivmpodcast.com/Shunya1. Over there's a button saying join the Slack channel, send us your email address, and we will send you an invitation. Also, please do a rating or a review wherever you could, if that is on iTunes or if that's on CastBox or wherever you are listening to this, please do a rating.
Absolutely. Thank you so much for doing this, Gaurav. We look forward to hearing more about M-Pocket, of course, and for seeing you when you're in Bombay next, and hope a lot more happens.
Thank you for having me. It's a pleasure.
Thank you so much.
How aware do you think you are of your laws and rights? Do you look up to laws when you are caught up in situations? Do you know what your rights are when you're stuck somewhere bad? Well, here's a show that can help you move an inch closer to being aware of what your rights are. Tune into Know Your Qanoon with me, Amber Rana. This is a podcast meant to answer all your law-related queries. Catch Know Your Qanoon every week on the IVM website or the app or anywhere you get your podcast from.
Every week comes a show where three people come together to tell you about stuff they like. A movie, a TV show, a book, and other stuff. Tune in every Monday on the IVM Podcast app to IVM Likes. Batman approves this message. Thank you, Batman.